Hi guys, so this is a great way for you to get in the property market without having any deposit, believe it or not. Family security guarantee. This presentation is obviously targeted at parents because without them this won't exist. So we do need your parents to have a property with equity in it to be able to do a family security guarantee loan. So here's a scenario: someone's buying a first home at Burleigh for $500,000, and what the bank does with a family security guarantee is the loan is calculated in two parts. They lend 80% against the property you're buying, so that's where we get $400,000 against the $500,000 property, and then you've got mum and dad's home there on the right, and they've still got a little bit of a loan owing on that, and that's absolutely fine. The property doesn't have to be totally unencumbered, and it can be an investment property. It doesn't have to be their home. It's actually preferred if it is an investment property, but they can use their owner-occupied dwelling. And what happens is, whatever money you need to complete settlement on top of the 80% is secured against your parents' home. So as you can see here, the $400,000 or 80% is secured against the property you are buying, and you need another $105,000. So we've assumed that you've got no money to put in at all, and that part is secured against your parents' home. And on the right there, I've just broken up the actual costs to acquire a property for $500,000 as a first home buyer. So there's no stamp duty, a little bit of transfer registration there, $1,381, registration of mortgage, and an estimate of $1,500 for your legal fees. So all up, you only need about $503,000. We've more than covered that with lending of $505,000. Now obviously the first home buyer is paying both of those loans. The parent doesn't have to pay any of the lending, but the smaller portion is secured against the parent's home. So it's important to understand that if the kids didn't pay the loan and took off, the parents will be left holding the smaller loan and have to pay that off. Now this scenario worked for a young couple with a combined annual income of $90K and no other debts. So very, very achievable. So just some of the pros and cons. Obviously the pros are help get kids onto the property ladder sooner rather than waiting to save a deposit. No need for parents to lend cash to their children. Limited guarantee that can be removed once the property can stand alone. There's no LMI or lender's mortgage insurance, which saves quite a few dollars. Might enable kids to purchase a better property than what they might have purchased if they were doing it without family guarantee. You can borrow the full amount required, including any purchase costs. And obviously for the parents, their living expenses will decrease once you move out. Some cons, there's obviously some risk taken by the guarantor should the kids not pay their portion of the loan. It can tie up the parents' home should they wish to sell, in the near future. So if the parents wanted to sell a year after setting this up, they would actually have to extinguish that portion of the debt. Some lenders will credit assess the guarantors. That means require them to be able to afford the loan. Guarantors are generally required to seek legal advice, so that's just another added cost, which can be a few $100s. And I suppose the last con is you may miss your kids once they move out. So there you have it, folks. You can purchase a property without having any deposit, as long as your parents love you. So as always, fill your details in below so that one of our expert mortgage brokers can be in touch with you and help you through the process and answer any questions you may have.